What's up, guys? Welcome back to another day trading video, and today we're gonna go into a quick video. Alright, so we're gonna go into a quick video. We're gonna go into indicators. Alright, so now that you know how to read the news from yesterday's video, we're gonna go over how to use indicators. So when you're using it on the charts, you see these big flashy light things on the chart, like telling you price, you might see the indicator where telling you where to buy and where to sell. You can, trust me, I've tried it. It doesn't work. All right, it does not work. It's an indicator that just uses that just puts buy when it's high. And the thing about that is, yes, it may be high, and yes, it may tell you to sell. Sorry, it's not buy but sell. But you never know. Like, say you buy into it because you believe that indicator, right? Say you buy and it's high and you're expecting it to sell. It could go even higher. I fell into that trap. I hope you don't. There is no indicator. There is no just one indicator that will tell you when to buy at the perfect moment. All right, price in the market is unpredictable, so you have to rely on yourself instead of these indicators. But indicators can help you for you. So since you got to rely on yourself, indicators are gonna help you, and you're gonna rely on yourself a lot more. I use indicators, very helpful, useful tool. They're tools, not strategies. All right, strategies is the strategy that helps you win money. They're tools within that strategy, tools that help boost that strategy, not the strategy itself. So let's go over what is. So first, we have to go understand what are indicators. Indicators are tools that use price action, past price actually, and volume data to help traders understand the market. This shows things like trends, momentum, volatility, making it easier to spot possible trading opportunities and decide when to buy and sell. All right, so they use the past price, collect data from it really quick, and since it's a computer, since it's like that, collects data within an instant, gives you that data, and boom, that helps you build an analysis on where the price might go, and like give you different trends or momentum or volatility within the market. So yeah, we have, what are they? That's what indicators are. Tools to help you within the market. It's gonna be a short video. So I'm going to talk a little bit slow, actually. Let's drag this out. All right, I'm sorry, guys. How they work. So they all work very differently. One indicator might tell you the volume. Another indicator will tell you trend lines. So they're very different. They all work. It's essentially the same thing as what they are. How they work is telling you what you want to know. What are they? There are tools. How they work, telling you past price, gathering information, and giving you new data to help you decide whether to buy or sell. So just helpful tools, all right? And then we have how to use them. So very simple. I'm going to show in tomorrow's video to get on how to get on the chart. Not you know how to get on the chart, but where exactly is it on the charts, and how to just how to put them, all right, and how to understand them, all right. So real quick, I'm gonna go over my main three that I use really quick. All right, so we have three indicators that I use. Actually, yeah, three. Actually, no, I use three different indicators, but I'm gonna show you three beginner indicators that you can use and break them down right now. And then tomorrow I'm gonna show you how they work. So first we have the volume indicator. This is just a basic indicator, uh, indicator. This is like what you're given from the start. When you open TradingView, a volume indicator should be put it right there on your screen. So what is a volume indicator? A volume indicator, listen quick, a volume indicator helps you see if the volume of the candle is strong or not. The volume bar below the candle represents the volume for that exact candle. I use it by seeing if there's a lot of volume in that candle, telling me that I can ride the momentum of that stock in whichever direction it's going. So let's break it down real quick. All right. Say we have this stock, right? There's a candle, and then we have this candle, uh, this candle, and then we have another green candle. All right. Volumes will typically be like this on the bottom. All right. So let's gather this, and boom. All right. So each bar volume represents that candle. So if you look straight up, this volume bar represents this candle, and you can see how big this candle is. Right now, right here, either side it will tell you a number. So let's put like 15K. On this candle, there was 15,000 worth of volume. All right, and within this single candle. All right, we see the next candle, the candle directly under this, the bar under directly under this candle. You can see that, let's say 16K was in this one. You can just point your mouse, and I'll show you this on tomorrow in the charts, and it will show typically right here. I'll show you what exactly it means and how to know which one each bar and how much volume it got in each bar. So you can see the bar. Black is green. I need new markers, I know. And we can see that these candles were actually pretty big. You can see how high they are. Now if you look at the red candles, we can see that they're pretty low, like significantly lower than the green bars. And we can see that this next green bar is significantly high. So what does that tell us? The volume from green candles buyers are greater than the volume of sellers. So what am I gonna ride? Who am I gonna ride? Pause. Which side am I going to take? Which bias am I going to be? I'm going to be, of course, on the buying side. So I buy a quick position, put my stop loss below the low. Let's put that right there. Put it 2 to 1 if you want, or target previous liquidity spots. And then we can see that, boom, it goes up. Here's TP1. I use TP1s. Here's TP1, and boom, right there. Sorry if I'm going quick, but it's very simple. Just like that. That is volume. Next, we have EMAs. EMAs are very, very simple. I don't know if I'm going to be able to show this on the board, but I'll explain it real quick. We have EMA. EMA refers to EMA, I use 3 EMAs. So they're squiggly lines on the chart, and there's 3 of them I use. EMAs refer to 3 exponential moving averages within a time period. We have the 9, the 20, and the 200. These are commonly used in trading to spot trends and possible buy or sell signals. The 9 EMA reacts quickly to price changes in a short term. So in the short term, it reacts to the price changes in that. The 20 EMA shows a more balanced view, medium term. So it'll tell me the price actually within a medium term. And then the 200 EMA helps me identify the overall long-term trend. This helps me see how the stock might react when it reaches those EMAs. So let's have this red be our EMA. Let's draw 3 lines. The first one is a 9, the second one is a 20, and the last one is a 200. It'll typically be like that most of the time. So we have, with the 9 being within a short term, it was moving, the stock market was moving up, then a little down, and then up, right back up. So it kind of like an uptrend. Within the medium term, it was kind of ranging a bit, and we can see within the long term, it was actually going down. So this will tell us within the long term. So if the price is actually above the 200, I would actually get a bias that we're in a bullish. So, and if the price, and within the long term, within the short term, so like the 1 minute, 5 minute, and if it's above the 9 EMA, I color coded, so I have red, orange, and blue, or red, blue, orange, actually, yeah, like that. Red 200, orange 20, 9 blue. Did I say that correctly? Yeah. So if it's above, then if the price is above the 9 EMA, I would get a bias of a bullish. If it's below the 9 EMA, I'll get a bias of a bearish. Then we have a last one, really quick. We have the volume weighted average price. So VWAP is actually what it's called. So I'm gonna show you different indicators. I'm gonna make another video teaching about indicators, because there's 3 different indicators I use. We have the volume weighted average price, helps me refer to the average price of a stock over a certain time period, but it also factors in how much of the stock was traded volume. The traders use it to see the volume, the overall trend, and spot possible chances to buy or sell by seeing if the stock will be supported or resistance. So instead of 3 lines, it's just 1 line. So you have the VWAP, and then you have price. So if price was above the VWAP, right, and if it goes down, I might see a reaction towards that VWAP, and so it might go back up. If it breaks VWAP, I might see a reaction that is going to dump down. All right, so very simple. It's just one line, and it's like the EMA, but this time it helps me refer to an average price of the stock over a certain time period, but also factor in how much of the stock was traded, the volume. So kind of different to the EMA. All right, so these are three basic beginner indicators that are used most of the time. I would suggest you master this, understand it, watch more videos, and yeah. Okay. So that's it for today's video, guys. Thank you so much for watching. If you like the video, please like, comment, subscribe. Please share with all your friends, and leave a like, ring the bell, and I'll see you guys in the next video. Peace.